Why is
and
it why is it called a power share?
that's just what it is. I don't know.
Okay, I'll look into that.
Yeah, that's a good question. Actually, I'm kind of curious.
Keep on going. Mm,
Hear me?
yeah, you're good.
Okay, so let me see if I can pull it up. We're gonna play with was QQQ. QQQ is trading kind of like the S&P right now, where the prices are over $300. Um, for the most part, those contracts are more expensive. What I was looking to do was hedge that position or hedge any current position with SQQQ. SQQQ is the inverse ETF of triple Q. And so let me see if I can pull this up and show you guys.
Because it's short. Right?
Because it's short, yeah. And so
Oh, dude, that's actually kind of sick.
and it's cheaper. That's the thing. So when QQQ goes up, SQQQ will go down. And I think what I want to start doing is hedging it with SQQQ because a lot of like the online social media and like YouTube people are saying that we're in a similar formation like what it is and what it was in 2000 with the tech bubble. And so I think it's most appropriate to play triple Q and SQQQ. Let me see if I can show you guys.
Is it so? Are you saying like make calls or puts on the SQQQ?
Yeah. So what I was thinking of was to buy calls for SQQQ.
Like long-term calls? He logged out for a second. I think he's reconnecting. What else were we gonna talk about? Graphs? Jared, didn't you have questions about how to look at Mac?
My bad. My bad.
Oh, never
Yeah.
mind. Go ahead. CT, you can continue.
My bad. So I'm trying to bring up the swim right now. So give me 1 second. I was trying to show you guys the two charts and the potential plays for them. What I wanted to do was buy calls for SQQQ to hedge the position, and those calls are pretty dang cheap right now. Strike. I got it.
I mean, you could buy some August ones for pretty cheap, dude. Like if you just keep on going out at the money and stuff.
Yeah.
Like you can go all the way out to September. Like you can get a leap, right? You can straight up get a leap for $200. Either direction.
Can you guys see my POS?
Yes.
Okay. So
Oh wait, TOS? No, I see your
Discord.
Discord screen.
Okay, forget it. Can someone else pull it up then? I think it's my connection.
Okay. Okay. Whoa, you pulled up screen so quick. It's that internet though. What internet do you have? Do you have like 20
I'm
gigs?
so sorry, guys. I'm so sorry. I'm at my girlfriend's place and her internet is like shit.
You got diet.
It is Xfinity. Okay, sorry, and I was outside, so now I'm back inside. So let's take a look. Let's see.
Don't blame it on her.
Let's see. Okay, so what I was thinking was buying the strikes for I think it was like 7 or 8, but like really far out maybe. They were very cheap.
Well, you can get like July 15th, right, for 8 or 7 for like $150.
Which date?
July 15th, 2021.
Uh,
Or January. January 15th.
Oh yeah, January. Yeah.
Yeah. And like that's kind of ridiculous. How much? That's like how many months? Is that 6 months? That's 6 months. That wouldn't be too awful.
What the hell?
Like the data is. Yeah. So even if you want to get like a $7 contract expiring in January, I think that might be kind of good too. But that's super far. I would try to look for. I was looking at August or September 18th.
And then buying more of them.
Yeah, as it gets closer. Let me see. Let me use a stock bot real quick to see which strike has the most liquidity.
But one thing I would take into consideration about comparing this to the tech bubble of 2000 is that the feds are stepping in hardcore, and I'm pretty sure they plan to step in even more before the market crashes again.
Mm-hmm.
Yes, that's definitely something to consider. The fact that there's unlimited involvement with the federal government this time around, to not have the same situation happen in 2000. But if you were, that's kind of why I recommended buying a strike close to the money is like the best strategy instead of buying something that's super out of the money. But if I were to pick a expiration, I would pick either September 18th or January 15th, 2021, because it looks like those two dates are the most liquid. And
So,
and it doesn't surprise me that using the stock bot that those two strikes have the majority swaying towards the call side. See real quick. So 166. Honestly, the September 18th looks very attractive. Just based on where we're going, I think it could hit. It could very well hit $7 by that expiration.
not on QQQ. It's on SQQQ.
SQQQ, yeah, SQQQ.
You're fine. I'm a little, at least I looked. That was crazy. I thought it was baked.
Hey, is J. Cole in here?
I'm trying to get him in here.
He should have access to it.
I saw him. He was in here last time?
Yeah.
I can give him an actual call.
And then another, I think you guys wanted to go through S&P, right? Or no?
Yeah, sure. It was VIX. Can you pull up VIX chart?
VXX.
Pull up VXX and then pull up SPY next to it.
How long have you been trading for now? What?
Newbies. Love it.
Dude. Like I'm trying I was just trying to put a date on it because dude, you're pulling up charts pretty fast.
I was gonna say that.
Do you guys just play? What do you guys play all the time?
Too many games.
Too many.
So pretty much these things go inverse of each other.
Yep.
Did you guys know this?
What? Oh yeah, they go. Yeah.
So like VIX and VIX and SPY are counterweights, pretty much. They're opposite of each other. So that's really handy to know when you need to hedge. Also, if you want to type in stock search for UVXY, UV or UXVY, is that the other one?
No, it's a UVXY, I think.
It's like, yeah. So you can see how that's like the opposite of SPY. There. Yeah, right there and right there.
Uh-huh.
So if you ever need a hedge like something, you could always go opposite that way, and sometimes contracts will be cheaper inverse that way of hedging, or you can just buy the stock rather less. Like for like if you were pending a recession, you'd buy into like VIX. Does that make sense? Mm. So you had questions. Well, they're complete opposite. They're complete opposites.
It's like inverse.
Oh yeah,
UVXY.
you can pull those side by side too.
What's the difference between UVXY?
One costs triple more or double more.
Is it leveraged or something?
I think it's 3 times leverage.
Okay, that's why. Gotcha.
So with some of these, right? With some of these inverse of the indexes, they're like leverage ETFs, and so they are like, I can guess I would say bigger cap, which is more expensive some because they're like 3 times the multiplier or whatever it is, and then that's just weighted upon whatever section of the market that would factor into that leverage ETF or bond or whatever it would be called, like for example the power share or the ultra share or whatever. So interesting too. What else? Didn't you have questions about the MACD? Sure.
Yo, what up, everybody?
Okay, so can you go to Myrna? And then, dude, that's cool. You've been charting. We were talking about instead using like Bollinger bands now, and instead of the MACD. But what essentially, if you want to zoom in on like a single day for the MACD really quick. Just do it from, just zoom in on the day itself. Yeah. Is that what? Is that correct? No, that doesn't look, because it was spiking up. I was like, wait, where are we looking at? Okay, so essentially how the MACD works, right? If you're looking at it in the front of the beginning of the day, around 10 o'clock right there, you would be, yeah, around there. So what happens is essentially what they do is they take a 12-day average and a 26-day average, and they lay it over a 9-day course. And what they figured out that if essentially when the two emit moving averages cross, right, as you can see from the beginning of that green volume, right, will perpetuate movement in volume, which is the correlation in RSI, which is above, right? So if you if the RSI is below 30, that's like bearish territory, right? But once RSI becomes above 70, that becomes bullish territory. And so pretty much that's how you can figure out your exits too when the MACDs cross back over again, like a little bit later in the day, right? To left a little bit, like exactly when they cross the first time. Yeah, right there, right there. So that's essentially where you could have sold out, but the reasoning between the RSI dropping is due to just a foundational structure in price for the share itself. So even though it was like closing the gap, the price to volume didn't fall that hard under the VWAPs. At least what you have the pink, right, for VWAP. Yeah, so that's the middle of VWAP. So it didn't fall below. Well, it did a little bit, I guess, but it bounced, right, and then broke back support, and then it ripped back from uh, lower volume shares or lower volume per stock, and then it started buying upwards again, right? So continuously throughout the day, it was just kind of it kept that notion. The only time that it really fell later in the day was when it broke under like $2 or $3, right? I think it's later than that, right there, where it passes. Yeah, where it passes the the middle VWAP, right? And then you can see how volume also deteriorated in the MACD if you just look at it from 1345 to 1500 and something, whatever, like in time. So with just how the MACD is moving downward trend in volume, I guess, if you will. Does that make sense?
Yeah.
Yeah. So the green. Yeah. But more or less the pullbacks, right, are like foundation unless it breaks below support. As so you marked arrows there, you know. Okay.
Oh yeah, the enhanced trend.
So perfect, you know. So it pretty much what it does. Is that live? Does that like mark live?
Yes, it
Yeah.
marks live.
That's fucking nuts.
It's the closing candlestick, so it could change while it's live, but as soon as it moves on to the next sell, so let's say you have for one time frame, the next minute it'll be for sure.
That's nuts.
Yeah. One thing I want to do is start to incorporate your stacked EMAs to see if have you had any success with that?
A little bit, just like kind of just with breakouts, but at the same time, it looks kind of funky on top of that line. If I was to actually pull it up,
Got it.
let's see. Here, I'll pull it up.
Also, one thing about the MACD that I've been looking at also, in addition, is that if both of the curves are above that's pink zero line, and I also identify it as bullish. If it's for any reason trades below that, then it's bearish until it moves back up. Yeah,
And like a huge issue with using MACD is like it's using moving averages instead of like exponential moving averages, you know?
it is
So-
using the exponential moving averages though.
Is it?
Yeah,
Okay.
so it uses the 12, 26, and the 9-day moving average. I believe the middle is the 26. Let me double check because you can see the parameters right there, right next to the name.
Oh yeah, it is using exponentials. Okay, never mind. So that's not bad. But so do you want to pull instead of VWAP, can you pull up the Bollinger bands?
If you're successful, have you been successful using VWAP though? Volatility. Bollinger has volatility studies all the way at the bottom. So I just recently started using Bollinger Band because what it is that it measures the volatility. And so for this particular chart, when the top, the red and the pink line are very close to each other, it's low volatility, typically during a consolidation. So if you were to look at the 11 p.m. on the left side there, right there, you see how that little gap is kind of close because they're consolidating. But if you were to, let's say, take a look at the very far right side where the after hours is, where it's spiked, the volatility increased. And so now that gap is a lot greater. And so that's the distance from just by viewing the space of the top and bottom band shows the volatility. And how I've been trading it is that if it's near the bottom of the Bollinger band, it's a bearish indication. And if it's on the top, it'll be bullish. But I also use them as price taking points. Switch your 1 minute time frame to 1 day. Yeah, that one. Okay, perfect. So it's super extended, super bullish right now. I would even switch it to 4 hours instead now. Let's see. Okay, 4 hours. Okay, it's super bullish right now. You can see that it's kind of near a place where you could very well see a pullback towards the middle, and that middle line is going to be your 20-day moving average. And another way to look at the top and bottom curve is that the top portion of the Bollinger Band is your positive 2 standard deviation. Your bottom purple is the minus or negative 2 standard deviation. So ideally, statistically proven, the price action will trade within 2 standard deviation, and that's a 95% probability of it. If you were to extend that Bollinger Band length to 3, then you are at a 99% probability that the price action will stay between those 2 Bollinger Bands. To change that, you just go under Studies, edit your studies. Yep. Yeah, and I actually don't see it popping up. So I would assume, so under length, if you were to change it from 2 to 3, 3 will increase your probability of 3% to stable within the Bollinger Band. 2 is ideal. What I have mine personally at is 2.5. I've also found that if you were to decrease the standard deviation to 1, you'd have a lot of false or noisy signals. Ideally, I like 2 and 3 standard deviation. Then you're increasing your odds from 95 to about 99% probability that the stock will stay between those bands. So this is like using Bollinger Bands is kind of one way that I'm trying to incorporate quantitative analysis in addition to technical analysis. It's also a good indicator for selling premium too. If you were to like increase it, if you were to sell strikes that are above those bands or outside of those bands, then you have a higher probability that it will not that the price actually will not be in the money.
So you'd be Gucci. Huh.
Hey, Cole, what are you referring to in regards to seeing signals?
I was just wondering, like, what is the program that you're using to? What's the name of this program that it shows all the candlesticks?
I use Thinkorswim.
Yeah. So this is Thinkorswim.
Okay.
Yeah, on the live chat that our crew has is Thinkorswim on the platform side. I use it on my phone since I'm at work a lot. At work, I can see the Bollinger Bands as well too.
Oh, okay, cool.
So
The
like
only thing I can't see is the enhanced indication with the arrows that Jared Yeah, that's the only thing I can't see. I've been using also, so for my mobile setup, I've been using ETM squeeze, ATR, RSI, and MACD. The ATR I don't really use, and that's the average true range. I don't really use that as much because I don't know how to use it.
it
But
looks
I've been
kind of
using
looks funky.
But I've been using the TTM squeeze lot, RSI, MACD, and the Bollinger Band, as well as I have I think it's like the 9-day EMA or something like that I have also.
So my other question is for the MACD, like what brokerage uses the MACD software?
Every I don't know a brokerage that doesn't have MACD as a default indicator available.
You can use it on Robinhood, but you have to be on a computer or a device.
Oh, okay. So I have to be on
Yeah.
the computer for that. Okay.
Like MACD, Bollinger Band, RSI, EMA, those are all like standard default indicators that almost every brokerage has. I don't know of any brokerage that doesn't have it.
Yeah.
Tried it.
You have to by turning them on. You'd have to go on Robinhood and pretty much like hit expand charts, and then you can access those.
And I can access them. Okay, so expand charts and then okay, I'll remember that.
And add, but I would recommend downloading Thinkorswim, and just like having it. So
I think I did that, but I haven't. I think I downloaded. I think it was Webull or something like that.
Oh yeah, Webull has it. I have it on Webull as well.
Okay.
I actually like using. What I do is I like to have TOS open so that I can see the charts, and then I have Webull for the level 2 because the level 2 on Webull is just like off the hook.
Okay, bet.
I can pull up something if I don't lie, like my EMA thing. Let's see.
And for the Bollinger Band, you can change the 20 to a different length if you want, but I found that 20 or 21 is the best. And what it is pretty much the last 21 sessions or last 21. If it's aggregated by 5 minutes, it uses the last 5 candlesticks. That's what the length pretty much means. If you change it to 1 day, it's the last 5 days. You guys understand like what the like the EMA, for instance, the length of the EMA, let's say it's 9-day moving average, or 9 length is 9. It's just whatever the previous 9 candlesticks were. If you're on a day, it's just day. Yeah, if it's 5 minutes, the last 5 candlesticks under the 5. That's why those indicators are so ideal for any type of time frame. It doesn't matter. For the 1 minute, it's just the last 9 1-minute candlesticks. The industry uses 20, 50, and 100. 20, 50, and 200. Sorry. 20, 50, and 200-day moving averages, because for the majority of the industry, they're long-term investors. That's why when like news came out about the Golden Cross, that was the 50-day moving average crossing the 200-day moving average. And when it was declining back in March, when the 50-day moving average crossed below the 200-day moving average, it's called the death cross.
Could you pull up instead of MACD the TTM squeeze? Or would you like me to? I could do it too if you would like.
Under
If you do edit studies, you can find stuff.
Yeah.
If you go up to the gear, right?
Yeah, no edit. He got it right. Under edit. DT underscore squeeze. Kind of weird because I can't see like when you and Poke are doing this, I can't see like the screen that pops up.
Because they're sharing only the Thinkorswim window.
Oh.
So when the second window pops up, we can't see that.
Yeah. Oh.
So if you guys share screen instead, I think we can see it.
I don't know. I think we're good. Okay, I'll fund it. I just have it on. Where the hell?
You guys got it?
Not yet.
You guys see this TOS? Yeah.
Yeah.
Okay,
Holy
so
shit. What the hell is this? Is this what you? Is that what you were looking at?
me?
You're on drugs.
Why is it because there's so many lines and shit?
I mean, I guess. I'm trying to make.
Yeah, so what I've actually been doing is looking at it like this.
Holy shit.
Is it just so many lines?
Holy shit.
What I was actually looking at was the triple Q. I feel like a bullish flag is formed. So TTM squeeze. But what I've been doing with the TTM squeeze and what I was showing the other members was that when it's like red like this, squeeze action, and look how it jumped too. Into that, and boop, into that. What did you want to talk about with the squeeze though?
The colors.
Or what they mean?
Yeah.
So on desktop, it's ideal to view this compared to the mobile because on the mobile, it doesn't show these colors. So for the TTM squeeze, how to use it is that the cyan color is momentum growing, or so increasing. Blue is momentum decreasing, and then red is cyan is momentum increasing on the upside. Blue is decreasing momentum on the upside. When it's red, it's momentum increasing on the downside. Then yellow is momentum decreasing on the downside. When these little dots in the middle, green means high volatility. Red means it's low volatility, or meaning that buyers and sellers are at a clear equilibrium, and that's the ideal price to or price and time to enter into a position, either up or down based on where it's going. So if you were to enter right here on 4-3, it looks like it would go. It could go up or down, but what you want to do is wait for the next candlestick to confirm that. So if you would have entered right here, it could have very well reversed the other direction. But since it went up it went up in momentum, I would have chased this one up until it got to whatever this is. So ideally, I like the TTM squeeze for multi-day swing positions because it gives you a more clear indication of the direction of the price action, and in conjunction with the other indicators. Because if you would have entered right here as well, it looks like MACD is above the bullish MACD is above the bottom one, and the vortex shows that there's bullish momentum increasing. And same with RSI. RSI is on a ascending end. So right here, the momentum's decreasing. It looks like it's gonna go and probably down a little bit. I would be kind of wary about when it gets closer towards this middle line here, which is the volatility line. Yeah.
They're crazy.
That's what I was doing with looking for sticks though, because when I was going through here, what I like to do was use the squeeze, to squeeze, find stocks that were potentially about to squeeze. Those are opportunities, and I just use the up and down arrow to quickly go through. Oh, so this one is about to squeeze. I just saw something. Which one was it? So one of these was about to squeeze. Oh, right here. No, here. And I just saw one that was about to squeeze. This one's hell expensive. So let's go. something that's more reasonable. Okay, so this one right here has been okay. Visa is like a very prime example of a one that has been consolidating, and you can clearly see that it's under low volatility. It's consolidating right now, but we don't know which direction it's gonna go up or down. So this is bound to break out, but it's not clear going up or down. But it does look like it's making lower highs. So I would imagine that after the period of consolidation, it'll decline, break down, just because it hits this trend line. Let me explain. Hits this trend line, rebounds, hits it again, rebounds, hits it again, making lower highs each time. I would actually move this. But it's nice because it's been trading within a range, so this is clearly about to break a breakout. But I would push it towards breaking down more because of the fact that it's moving, making lower highs. And if it were to break down, it will most likely hit one. I would probably hit the top of this 178.8, 78.8. Would look for a price target of 180 just to be safe on the downside.
So when you say that, you mean if it hits 180, it's probably gonna go down?
So I'm thinking that if it does decide to break out of this trend,
Uh-huh.
this consolidation phase right now, that it's going to go down towards 180. I don't think it's going to go up. That's why, because the way
Yeah.
that it's consolidating and the fact that it's making lower highs after when it's coiled like that, it's bound to break either up or down. But because it's making lower highs, I'm gonna guess that it's gonna break down instead of up. It's failing to break above this trend line right here that it's clearly as a clear resistance. Then if it does go down, you're gonna want to look at the next place where next lower level that is gonna be a ideal price target. And in this event, I would shoot for 178 or 180 to be safe. And if we were to look at contracts for 180, assuming that and you do want to find a contract with the expiration that's a little bit further out because we don't know how long this is going to consolidate for, because so far it's consolidated for 2 months. So I would look for another 2 months just to be safe. So August would be, or September would be ideal, and I would look for 180, but that's trading at around 400. But looking at the volume and the open interest right now, I would pick somewhere closer to possibly 150, possibly at the very furthest out of the money. 150 is really freaking low. Maybe not even 150 because that's like your probability is so low. Let me see what the Bollinger Band.
How's everybody's weekend?
Pretty chill.
See,
Pretty good.
even looking at the Bollinger Band, it shows that it's very tight and is actually getting tighter, so the volatility is getting lower. Yeah, it doesn't have a clear. I would just go for 180.
Did you want to talk about anything?
No, you guys heard it all.
You guys have any questions? Did that help clear up MACD though a little bit? And then like, but we kind of been like looking at the TTM squeeze and the Bollingers more than the MACDs. But we do utilize that still, you know. I have been looking at like different levels of EMAs, like different ranges, which is like a stair step of EMAs. So that's kind of the same thing. Yeah. What else do we have said tonight? That's it.
I'm gonna show one more thing.
Alright.
Are you guys looking at any potential long-term plays?
I'm looking at Neo.
Neo long-term? Okay.
Yeah,
So,
but not as in. But I haven't looked at like the plays for Neo long term. But I've looked at the shares more so.
okay,
Than,
gotcha. I think this area right here where it's at is a good time to buy long-term.
Mhm.
But how long are you trying to hold it for, and why specifically Neo?
Which wait? Can you go back to where'd you say it was a good area to buy it at?
Around the middle of the 20-day moving average. A
Oh,
lot of stocks have actually extended so far out and bounced back and held the 20-day moving average. Because if you were to look at other stocks like CRM, CRM was SE.
You've been watching CRM?
A little bit. I was actually I want to start incorporating more fundamental analysis. So I was going to do a what's called a discounted cash flow model. You guys ever heard of that? So a lot of like investment banks use DCF. My buddy at Merrill Lynch actually recommended that. But it just allows you to determine what their true value is. So let's say like if you do this DCF model and it's price and Salesforce had a result of like 175 and they're currently trading at 187, that means that they are overvalued. Or let's say you were to do the opposite and their true value is at 195 but they're at 187, that means that they're undervalued and they have a that like a 10 or $10 price target that it could hit.
See that?
Running it. So what I'm going to do is I'm actually going to take a look and see if I can find create a Excel sheet that has functions already built in, and so all you would have to do is enter the current price, certain inputs, so that it can just generate give you a yes or no for value or undervalue. I'm going to try to create a Excel sheet for you guys to make it a little bit easier.
Yeah, and to answer your question on why like I entered Neo is because I heard some news about coronavirus like dying down out in China, and they just hit their 50. I think it was like their 50,000 vehicle production. So there's like positive news about them and their stock about. I heard something about Goldman Sachs buying a bunch of shares from their as well too. So that's why I picked them.
Gotcha. Let me see if I think on Webull you can find who the institution investors are or that own the shares of Neo.
Okay.
For using the TTM squeeze, doesn't matter which time frame we're looking at. It's all the same, right?
It's, I mean, unless you look at it really closely.
Okay.
Like, pretty much, yeah. But it should be pretty much all the same. Like, what was I doing?
Okay, so I found it. So on the app of Webull, you were to pull up Neo and you go under profile, it shows you the institutional holdings. And then if you were to click the arrow, it actually breaks down what the percentage of the institutions that are holding it. And on the screen before that, it shows you how much has increased or decreased or have been sold from institutions in the last, I believe, quarter. Don't quote me on that time frame. Yeah, so the date is as of 6/30, so last quarter.
Okay, cool. Do you guys use the app called StockTwits?
Yeah. I use that for my chatter notifications.
Okay, cool.
When I tell you guys that, let's say NVIDIA is like increased chatter in NVIDIA, that's because StockTwits tells me.
Okay, yeah. I just found that. I found them yesterday, so I was just wondering.
Yeah, super helpful. But like the thing is that it's a lot of noise.
Yeah.
There's a lot of like retail investors that may not know shit, and they're just posting stuff and they pump it up. That's the thing. So I don't even check it up anymore. But if it's trending on there, I like that, because if it's trending on there, it shows that there's increased momentum because of how big the how many subscribers that they do have, or how many users that they do have on StockTwits.
Yeah.
Kind of like Reddit in a way.
Yeah.
If it's trending on Reddit or if it's trending on StockTwits, there's definitely going to be increased momentum. I like that too.
You do have the stock bot too. I'd recommend checking out the commands when you can.
Okay.
Yeah. It helps a lot. There's a lot of info in there.
If you guys think that I'm going to show you guys Triple Q real quick, and can I have your opinion on it? Because I feel like it's for bearish bearish flag. And I wanted to see if anyone else saw that too.
What are futures right now?
Good question. Let's take a look.
Let's see the future. We're up. We're not that up. We're still within the range.
For some reason I can't see.
They're not really up. They're like barely up. I mean, would it be like the fourth week bullish?
I think it's the third. I think that it. Oh wait, actually, I think this is the start of the fourth week that the S&P could potentially end green. So what I was looking at was Triple Q, which is the tech ETF, and since that huge decline to the bottom Bollinger Band.
This is entering the fourth week.
I think that it's consolidated and formed a bearish bull flag. Do you guys see this as well too? Do you guys think it's gonna? I think with the TTM squeeze, it shows that bearish momentum is increasing. I think it's gonna break down. To be honest, I think this might be the time that it's gonna actually retrace further back.
So, do you think the market's gonna be more bullish on Monday then?
I think it's gonna be bearish based on where it's at, and then like I keep like hearing about how the 10-year bond is also about to like break out of its descending pattern. So let me show you that real quick.
Aren't they doing the market pump still?
They are, but I just don't know if it's gonna affect like. So a lot of people say that this indicator is a leading indicator to the market, to the majority of the market, and so what happens here happens how this price, how the 10-year Treasury bond yield trades. It'll be the S&P will react afterwards based on where the 10-year bond is. It looks like it's gonna fall below the
dollar
soon. Strong support soon, and if it does, I think the S&P will also retrace with it. So what I've been doing is having this screen up, or the stock up, and then using it as a reference trade S&P.
Well, if you look at the TLT on the yearly, like it looks like it's bound to crack again. Like
on the 1-day chart,
on the yearly chart on the TLT. I mean, I could see things going sideways really quick.
And the momentum's decreasing on this too, though. But typically, yeah, I just think that we're bound to see some huge pullback soon, and the fact that we're S&P is struggling to break above that 323 range. It keeps consolidating or retracing back. I think and the fact that also the last week volume has been super slow, we're bound to have like some huge price action very quickly sometime soon.
Like somebody's gonna sell out just randomly, like a huge
Something and the fact that the volume, so people are watching this. I know that people are watching it, they're just not trading it because you can see it's evident in the first half hour of market open and the last half hour of market open. There are still traders that are out there, they're just not doing much intraday.
sketchy too. Okay. I think we're good for today.
Awesome.
Cool.
All right. Peace, guys.
Peace.
Thank you guys.
Thanks, guys.
Bye.